Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 15th at about 2:45 p.m. Eastern. Well, U.S. stocks have been climbing higher today as upbeat retail sales data allayed some concerns about an imminent recession. As well, the Federal Reserve officials today signaled that they will likely stick with a 75 basis point interest rate increase at their July 26-27 meeting, though a recent high inflation reading could still warrant more or faster increases later in the year. So we've got a lot going on right now, and we are going into second quarter earnings season, which could add even more excitement to the market in the coming week. So now let's look at three charts that could give us a little insight into the week to come. Fingers crossed that happens, right? Okay. Our first chart today is our usual daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY, look over here on the far right, the SPY was trading at $384.45. It's still kind of where we were last week. It's still 19% below the SPY's last all-time closing high back up here in January, on January the 3rd at $471.71. Now, we, of course, already know that the SPY moved from those January highs down in a downtrend, rallied up a bit in March, then started down again. Now, our last major high here was in May, right here, and the high was at about 417, right up here in this consolidation. Then the SPY rolled over, did a dumpster dive down to the June low at $362, or about $36.20 on the S&P 500 itself. It then rallied back up to 393, then it dipped back down to 372.50, up again, back down again, down to Thursday's low this week at 371. So what can we, if we stand back and look at this chart, what do we see? We see from these March highs that the SPY has been in a confirmed downtrend, lower highs and lower lows. It did rally up in May here, again back up to 417, and looked like it could maybe keep going higher, but it was not the case. And again, that dumpster dive we talked about all the way down here to this 362 low. So what do we see here? We see the SPY trading below, of course, the black line, the 200-day moving average, below the 50-day moving average, the green line, and just today, kind of white-knuckling the 20-day moving average, which is coming in at 380, just about 4 points below where the SPY is right now. So the 50-day moving average has acted as kind of a downtrend line for the S&P, although that index has been trading to a discount to that 50-day moving average. I drew a downtrend line right here over these highs, over the May highs, and down to our recent little pivot high here. So we have this channel, as you can see, kind of back up and look at it. We have this channel moving lower, but we do have 1, 2, 3 places here where the SPY held at 370. And why did it hold? It held because buyers came in and didn't let it come down and retest these lows at 362. Buyers came in. Every time it started down, buyers came in. Will they continue to do so? If they do, we could call this potentially, if it starts up, makes a higher high here, we can call it a tradable bottom, which means that you can trade it, but you don't just assume the market's going up from here. We don't assume the market's going down from here. So the bottom line here is, with earnings season coming in next week and a lot of tech companies reporting, that could throw the market way up or way down when some of the big ones announce. We need to keep watching this low here at 362. It's still in place. That's our line in the sand here. And again, next week could be a bit more volatile as the big tech companies start reporting, because they can move the market, believe me. I will be a much happier camper, however, when and if the SPY can come up and, just generally speaking, move over its 50-day moving average. And you know me, I want it to stay above that average for at least 3 days. That shows there is some buying power in there, at least a little bit positivity. So again, next week could be hectic. Keep your eye on this line, 362. And please remember to assume nothing. Just keep an open mind. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this represents the NASDAQ 100, a major index in the market, with top holdings today including Apple, Amazon, Microsoft, and Tesla. Now, today when I captured this chart, the QQQ was trading at $291.24. Now you can see here that the Qs are today, it did manage to get up, if you can see it, look over here. This is where I am. It did manage to get over the 20-day moving average. That's a good thing. It hasn't yet gotten over the 50-day, hasn't been over it since last March, actually. But we will have to see in the coming week what these, this does follow momentum stocks, tech stocks. We'll have to see what these earnings announcements do to the QQQ. It is still 27% below its all-time closing high that was back here in November. And of course, we call it bear market territory because the Qs are below, more than 20% below the all-time high. So we have it coming down here. Our recent high was $314.50 in June. Then it fell down, did the dumpster dive thing again, down to the lows here at 269. Then, kind of like the SPY, it's trying to make up its mind if it can actually get itself out of this downtrend or not. But again, we've got a lot going on next week, and that remains to be seen. It looks like volume is staying relatively strong here. That's a good thing. And if we're making higher lows here, just little tiny higher lows, that's a good thing. It means buyers are coming in. But I will not, and I don't believe anyone else should declare this as the bottom until we find out for sure and we can see the Invesco QQQ making higher lows and higher highs. Again, I have to say this, please remember, it's not how much you earn in markets like this, it's how much you don't lose. Okay, our final chart today is a chart of the Invesco Water Resources ETF, a daily chart. The symbol is PHO. Now the PHO has 38 holdings. The top holdings include Xylem, Tetra Tech, IDEX, and the Toro Company, and Penn Air. Now the PHO, excuse me, had its all-time high in January of this year, right up here, at about $61. So, and when we look at the chart today, right now, the PHO is trading at $46.79. So like a lot of the market, the PHO did a nice dive into January, did the February 24th low that everybody did. On this chart, it did it at $48.61. So it fell from those 61 highs down to $48.61 on February 24th, leveled out a little bit, climbed back over its 20 and 50-day moving average up into the $53 area, rolled, just couldn't stay up here, rolled over again, fell with the market down, not as dramatically as a lot of parts of the market, but it did come down here in the 47 area, back up to the 50-day, and notice it couldn't stay above that 50-day moving average. So it rolled over again and then dove down to 43.22 on June the 16th. Now, it has rallied from there. It's trying to get back to a little more positive zone, like so many of our ETFs are today. Our excuse me, so many of our sector ETFs. So it's moved up, tried to get over the 50-day moving average a couple of weeks ago, got over it, but couldn't stay over it. However, it's keeping its lows here, moving kind of sideways, and again, now today is trading at $46.79. Now, I like to be in water stocks in the summer. It's just many times works out very well, but of course not always. But many times it works out very well. And with earnings season upon us and tech stocks announcing, and they have the ability to toss the market around, I like to get into a happier, calmer space for a little time, if it behaves. So if in the coming week the PHO can remain above the red line here, the 20-day moving average, which is coming in right now at $46.01. So call it $46. If the PHO can stay above that number in the coming week, and if it can remain above the 20-day moving average, that's exactly where 46 is, I will buy a small position of the PHO, and my stop will be a hard stop placed with my broker at $44 down here, $44.80. Now, if and when the PHO can climb up over the 50-day and close above $48, which is the top of this little pivot point right here, I will add to my position, and by then I will be using a trailing stop. And you say, what trailing stop? Well, guys, you can use a close below the 20-day moving average for a trailing stop. You can use it as an intraday stop. I would place a hard stop with my broker because, again, this market could get a little crazy again with earnings season and with the Fed announcing potential interest rate hike again in the next couple of weeks. So you can use a percentage stop. Maybe you want to use anywhere from a 5, some people want to use a 10% trailing stop or percentage stop on your position, and that's fine. It's the longer you're in it, the lower your stop, right? The longer you plan to be in it. But be careful in this market. You don't want to make a bunch of little losses in a row because they add up to big losses. So keep your stops in smart places and keep a disciplined way about you. And if you say, I can't figure out what's going on here, then go ahead, get on the sidelines and stay there until things straighten out a little bit. So you might want to keep an eye on the PHO here in the coming week. Now, while the market is making up its mind what it's going to do next, this is a great time to invest in yourself. Take a few minutes to check out my online training programs and see how you can become a better trader. Our 7 steps to successful trading is our flagship product. It's a very fine product. All of these products, training products, are timeless, and they can help you increase your gains. Now, how to swing trade successfully. Knowing how to swing trade in a market like this is also a great skill set to have. Swing trades generally you hold between 2 and 5 days, right around there, sometimes longer. I teach you a method here where you can hold them longer, as long, of course, as the stock obeys your discipline and what I'm teaching here. So this is a great time to learn how to swing trade successfully. As we find the market bottom, be a great time to learn how to trade the trend to profits, where you're not in and out all the time. You pick one stock and or 2 or however many you want, and you do exactly as we tell you in this particular program. For novices, how to read charts is a good one. 3 winning setups is a good one. And of course, right now, if we're searching for the lows here, learning how to bottom fish like a pro is excellent knowledge to have. Again, these programs are timeless, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen. up here, or just easily click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.